This is one of those days in crypto where you stop, take a breath, and realize that something truly important just happened. Not hype, not speculation, real institutional movement. Today, one of the most powerful banks in the world, BNY Mellon, announced the launch of tokenized deposit services for institutional clients. And at the center of this system sits Ripple, RLUSD, and ultimately the infrastructure that supports XRP. If you hold XRP, or if you care about where digital assets are really going, you need to understand what this means. This is not about price candles. This is about building the plumbing of the future financial system. Welcome back to BullionIQ, the channel where we break down crypto, blockchain, and digital finance in a way that actually makes sense. If you're new here, I speak to you not as a trader chasing the next pump, but as a financial analyst focused on long-term infrastructure, regulation, and institutional adoption. If you want clarity instead of noise, you are in the right place. And if you stay with me through this breakdown, you will see why today's announcement is one of the most important developments Ripple and XRP holders have seen in a very long time. Let me start with the core news. BNY Mellon, the largest custodian bank in the world with over $55 trillion in assets under custody, has officially launched tokenized deposit services. This means they are creating on-chain digital representations of client bank deposits. These are not random crypto tokens. These are mirrored records of real money sitting in regulated bank accounts. And Ripple's enterprise platform, Ripple Prime, is named as one of the early adopters. At the same time, BNY Mellon is already the primary reserve custodian for RLUSD, Ripple's regulated stablecoin. That connection is not accidental, it is strategic. What BNY is doing is taking traditional bank deposits and giving them a digital form on a private, permissioned blockchain. The actual legal deposits still stay on BNY's traditional banking systems, so regulatory reporting and compliance are fully preserved. But now, institutions can move this digital cash on-chain in near real time with programmability and far less settlement friction. In simple terms, they are turning bank money into programmable digital money without breaking the rules of the financial system. Why does this matter? Because global finance is moving toward an always-on operating model. Institutions do not want to wait days for settlements. They want faster movement of capital, more transparency, lower risk, and better liquidity. Tokenized deposits allow banks to reduce friction in collateral management, margin workflows, and future programmable payments. This is not about retail crypto. This is about the backbone of institutional finance. Now here is where Ripple enters the picture. Ripple's official statement confirmed that their partners at BNY have launched this system and that Ripple Prime is one of the early participants. They also emphasized that BNY is the primary reserve custodian for RLUSD. This means that the stablecoin issued by Ripple is backed and managed inside one of the most trusted banking institutions in the world. That alone separates RLUSD from most other stablecoins. BNY's own announcement explains that these tokenized deposits are digital book entries representing client deposit balances, operating on a private blockchain under BNY's risk, compliance, and control frameworks. Client balances are still recorded in traditional systems, but now they can be mirrored on-chain for faster, more efficient financial operations. This is institutional-grade digital cash. And here is the key point. BNY is not just experimenting with one digital product. They are building an entire ecosystem that connects traditional banking infrastructure with stablecoins, tokenized money market funds, and tokenized deposits. In their own words, tokenized deposits will become the connectivity tissue of their digital financial infrastructure. This means BNY is positioning itself as the bridge between traditional finance and blockchain-based finance. So what does this mean for Ripple, RLUSD, and XRP? First, RLUSD is no longer just a stablecoin for crypto markets. It is being placed directly inside a bank-grade digital cash system. Because BNY already holds the reserves and manages the transaction flows, RLUSD is becoming part of institutional settlement, liquidity management, and treasury operations. This gives RLUSD a level of credibility, compliance, and integration that most stablecoins simply do not have. Second, this setup changes the way institutions view Ripple's ecosystem. Instead of seeing Ripple as just another crypto company, they now see it as a technology provider that is embedded inside regulated banking infrastructure. This is why Ripple waited for strict regulatory approval, including New York Department of Financial Services oversight, before fully launching RLUSD. They were not targeting retail traders. They were building something that banks could legally and safely use. Third, and most important for XRP holders, this development strengthens XRP's role as a bridge asset. As banks create private, permissioned ledgers for tokenized deposits and digital securities, a new problem appears. How do these systems connect with each other? How does value move across different blockchains, networks, and jurisdictions in real time? This is exactly where XRP is designed to operate. XRP is not meant to replace bank money. It is meant to move value between systems quickly, cheaply, and with deep liquidity. When you combine RLUSD as a regulated, bank-friendly stablecoin with XRP as a neutral, liquid bridge asset, you get a powerful infrastructure for cross-network settlement. Tokenized deposits can handle internal bank operations. RLUSD can provide stable digital settlement. XRP can route value between different networks, currencies, and jurisdictions where tokenized deposits alone cannot easily move. This is why today's announcement is so important. It shows that Ripple is not chasing trends. They are building institutional plumbing. While many crypto projects focus on speculation, memes, or short-term narratives, Ripple is embedding itself into the actual financial system that moves trillions of dollars every day. If you are an XRP holder who feels frustrated by slow price movement, this is where you need to zoom out. Real adoption does not always show up immediately on a chart. But when the world's largest custodian bank integrates your ecosystem into its digital cash infrastructure, that is not noise. That is foundation-level progress. Now let's go deeper into why this BNY Mellon move is not just good news, but structurally important for Ripple, RLUSD, and the long-term role of XRP. To understand this properly, we need to look at what BNY is actually building and why Ripple is positioned inside that system in a way almost no other crypto company is. BNY is not launching a public blockchain product. They are not creating something for retail traders or crypto speculation. They are building a private, permissioned digital asset platform for institutional clients. This means only approved participants, governed by strict compliance, risk controls, and regulatory frameworks, can use it. In this environment, trust, custody, governance, and regulatory clarity are everything. And this is exactly where Ripple has spent years positioning itself. Tokenized deposits are not stablecoins in the traditional sense. They are digital representations of real bank deposits. The legal claim on the money remains with the bank, and all regulatory reporting remains intact. But now that money can move on-chain, be programmed, and be settled in near real time. This allows institutions to handle collateral, margin, liquidity management, and future programmable payments much more efficiently. BNY has made it clear that this is only the beginning. Their digital cash ecosystem already includes stablecoins, tokenized money market funds, and now tokenized deposits. They want these instruments to interoperate. In simple terms, they are creating a digital version of the financial system where different forms of money and assets can move together on-chain under one trusted institutional framework. This is where RLUSD becomes critically important. BNY is the primary reserve custodian and transaction banking partner for RLUSD. That means they hold and manage the fiat backing the stablecoin and oversee the money flows that support it. As BNY builds its on-chain cash infrastructure, RLUSD is naturally positioned as the enterprise-grade stablecoin that can plug directly into the system for settlement, liquidity buffers, and treasury operations. This is not something you see with most stablecoins. USDT operates largely outside traditional banking oversight. USDC has strong compliance but is not embedded at the infrastructure level inside a global custodian bank in the same way. RLUSD is being designed specifically for institutional use under strict regulation, with reserves held at one of the most trusted banks in the world. That is a completely different model. The fact that Ripple Prime is named as an early adopter of BNY's tokenized deposit system is another key signal. Ripple Prime is not a retail product. It is designed for institutions, treasury desks, and liquidity providers. This suggests that RLUSD treasury operations, liquidity management, and potentially prime brokerage functions will sit directly on top of BNY's digital cash rails. In other words, Ripple is not just using the system. It is becoming part of how institutions manage and move money within that system. Now let's talk about what this means for XRP at a strategic level. When banks and financial institutions operate on private, permissioned ledgers, they create efficient internal systems. But these systems do not automatically talk to each other. One bank's digital ledger does not seamlessly connect with another bank's ledger, or with other tokenized asset platforms, or with international networks. This creates fragmentation. This is where a neutral, highly liquid bridge asset becomes necessary. XRP was designed for exactly this purpose. It is not tied to one bank, one country, or one permission network. It can move value across different systems in seconds, with low cost and high liquidity. As more institutions tokenize deposits, securities, and funds on private blockchains, the need for interoperable settlement grows. You need something that can connect these systems without forcing every institution onto a single network. This is what I mean when I say XRP is positioned as the connective tissue between financial networks. Tokenized deposits handle internal bank money. RLUSD provides stable, regulated digital settlement within institutional frameworks. XRP becomes the asset that moves value between different networks, currencies, and jurisdictions where tokenized deposits cannot directly travel. This also changes how institutions perceive XRP. For years, many viewed it as just another cryptocurrency, subject to volatility and regulatory uncertainty. But inside a BNY-style controlled environment, XRP begins to look less like a speculative asset and more like a specialized liquidity tool. It becomes part of a regulated bank-integrated system for real-time settlement and cross-network interoperability. Another important point is compliance. Institutions cannot use tools that expose them to regulatory risk. RLUSD is issued under strict regulatory supervision. BNY operates under some of the most rigorous banking regulations in the world. When XRP operates alongside these instruments within compliant frameworks, it becomes easier for banks, fintechs, and corporates to justify using it for liquidity and settlement. This is also why Ripple waited patiently for regulatory clarity before fully launching RLUSD. They did not rush to market. They aligned themselves with regulators, custodians, and institutional partners. They understood that if they wanted to build infrastructure for banks, they had to meet banks where they are in compliance, governance, and risk management. What we are seeing now is the result of that long-term strategy. Ripple is not chasing short-term adoption. They are embedding themselves into the financial system's core. When BNY says tokenized deposits will become the connective tissue of their infrastructure and Ripple is already positioned within that framework, it tells you exactly where this is heading. For XRP holders, this is not about overnight price movement. This is about structural demand. If XRP becomes the asset that enables liquidity across tokenized deposits, stablecoins, and digital securities, then its utility grows with every institution that joins these networks. That kind of adoption is slow, quiet, and often invisible to retail traders at first. But it is also far more durable than hype-driven cycles. This is why I keep saying that Ripple is building plumbing, not products. Most crypto projects build apps. Ripple is building the rails that move money between banks, networks, and countries. And when those rails go live at scale, the assets that operate on them become systemically important. Ripple has officially received electronic money institution status and crypto asset registration from the UK's Financial Conduct Authority. This is not just another license. This is one of the hardest approvals to get in the global financial system, especially in the current regulatory environment. In simple terms, Ripple is now legally authorized to operate real payments, e-money services, and regulated crypto activity in the United Kingdom. To understand how important this is, you need to know how strict the FCA has become. Over the past few years, the UK has taken a tough stance on crypto and digital assets. The approval rate for these licenses is extremely low. The majority of applicants are rejected. When Ripple receives both EMI status and crypto asset registration, it is a strong signal that regulators view Ripple not as a risky crypto startup, but as a compliant financial infrastructure company. This license means Ripple can now directly offer Ripple payments and related financial services to UK banks, fintech companies, corporations, and payment providers without operating in a legal gray area. Institutions can integrate with Ripple's technology while staying fully within regulatory frameworks. That is exactly what large financial players need before they will commit capital and operational resources. For RLUSD, this is equally important. A regulated stablecoin only becomes powerful when it can operate inside licensed payment systems. With this approval, RLUSD and other digital assets can sit inside real, compliant payment flows in the UK. This means cross-border transfers, treasury operations, and institutional settlements can legally include digital assets rather than being limited to traditional rails or exchanges. For XRP holders, this matters because it expands the map of where XRP can be used for real money movement. This is not just about trading. It is about rooting value in regulated corridors. When Ripple is licensed in a country, it can integrate with banks and financial institutions at the infrastructure level, and when Ripple integrates, XRP becomes a potential liquidity tool inside those payment flows. Think about what this unlocks. UK banks, fintech firms, corporates, and even small and medium enterprises can now plug into Ripple's network under full regulatory compliance. They can move money internationally with lower cost, faster settlement, and better transparency. Over time, this creates demand for liquidity across corridors. XRP is designed to provide that liquidity when moving between different currencies, systems, and networks. This also strengthens Ripple's global regulatory footprint. Ripple already holds licenses and registrations across major jurisdictions, including the United States, Europe, Singapore, and now the UK. Very few crypto or blockchain companies can match that level of regulatory coverage. And if your goal is to become a global liquidity and payments infrastructure provider, regulatory approval is not optional. It is the foundation. Another important point is how this positions Ripple relative to competitors. Many crypto companies talk about compliance, but few actually secure top-tier licenses in strict jurisdictions. Ripple is doing the hard work. They are building relationships with regulators, central banks, and financial institutions. This is why they are often invited into high-level policy discussions and international financial forums. Regulators see them as part of the future financial system, not as an outsider trying to disrupt it from the margins. This UK license also creates room for expansion. Once a company is approved under the FCA framework, it becomes easier to roll out new services, onboard new institutional clients, and scale operations across the region. It also strengthens Ripple's credibility when negotiating partnerships with banks and financial institutions in other countries. Regulators talk to each other. A license in one top-tier jurisdiction makes approvals in others more likely. Now let's connect this back to the broader strategy we discussed in the previous parts. BNY is building institutional digital cash infrastructure. Ripple is embedded in that system through RLUSD and Ripple Prime. At the same time, Ripple is expanding its regulatory footprint in major financial hubs like the UK. These are not separate developments. They are two sides of the same strategy. Ripple is positioning itself as a compliant global infrastructure layer for digital value transfer. Tokenized deposits handle internal bank money. RLUSD provides stable digital settlement within regulated frameworks. XRP acts as the bridge asset that connects networks, currencies, and jurisdictions. And regulatory licenses like the FCA approval make it legally possible for institutions to use this stack at scale. This is why I keep saying that XRP's value proposition is not about hype cycles, it is about systemic integration. Every time Ripple gains regulatory approval in a major market, it increases the potential surface area where XRP can be used for real financial flows. This is slow, methodical progress, but it is also how lasting financial infrastructure is built. There is another subtle but important implication here. When a company operates under strict financial regulation, it becomes part of the policymaking conversation. It can help shape how future rules are written. Ripple has already been active in regulatory discussions in the US, Europe, and now the UK. This gives them influence over how digital assets, stablecoins, and tokenized money are treated in law. That is an advantage most crypto projects do not have. For long-term investors and holders, this is the type of progress that matters most. Price may lag in the short term. Markets may remain choppy, but underneath the surface, the rails are being built. And once institutions fully adopt digital settlement, tokenized assets, and programmable money, the networks that enable that movement will become essential because the news from BNY and the UK license are not isolated events. They are part of a long-term plan that is very different from how most crypto companies operate. While many projects focus on short-term growth, token hype, or public market attention, Ripple is quietly building infrastructure that is meant to last for decades. One of the most important things to understand is Ripple's decision to remain a private company. Many people assume that Ripple will eventually go public through an IPO, but if you listen closely to what leadership has said over the years, the message is consistent. They do not want to be driven by quarterly earnings reports, shareholder pressure, or short-term performance targets. They want to reinvest capital into technology, acquisitions, regulatory expansion, and global infrastructure. This matters because building financial plumbing is not glamorous, and it is not fast. It requires years of regulatory engagement, partnerships with banks, integration into legacy systems, and compliance with different laws in different countries. A public company under constant pressure to show profits often cannot make those long-term investments. Ripple can because it is private and focused on execution rather than optics. When you look at Ripple's recent moves, you can see this clearly. Instead of marketing hype, they are securing licenses, building institutional products, and embedding themselves inside regulated financial systems. The BNY integration is not a marketing stunt. It is a foundational piece of digital cash infrastructure. The UK FCA approval is not for headlines. It is for legal access to one of the world's most important financial hubs. This is also why Ripple has been spending heavily on acquisitions, technology development, and regulatory compliance. They are positioning themselves not as a crypto company, but as a global financial infrastructure provider. Their goal is to sit at the intersection of traditional banking, digital assets, and cross-border payments. Now let's talk about what this means specifically for XRP. Many investors get frustrated because XRP does not behave like meme coins or speculative assets. It does not move on hype alone. But that is because XRP's role is different. It is not designed to be a product. It is designed to be a tool. XRP's purpose is to move value between systems. When banks, payment networks, stablecoins, and tokenized assets all operate on different platforms, you need something that can connect them. That is where XRP fits. It provides fast settlement, low transaction cost, and deep liquidity for cross-network transfers. What we are now seeing is the environment that XRP was built for finally starting to emerge. Tokenized deposits create digital bank money. Stablecoins like RLUSD create regulated on-chain settlement. Tokenized funds and securities are being issued by major institutions. But all of these systems exist in separate silos. The more of these systems exist, the more valuable a neutral bridge asset becomes. This is why I describe XRP as a system asset. Its value does not come from being used by millions of retail traders every day. It comes from being used by institutions to move large amounts of value across networks that do not naturally connect. When that happens at scale, the demand for liquidity in that asset grows. Another key point is trust. Institutions do not adopt technology that feels experimental or legally uncertain. They adopt systems that are regulated, audited, and integrated into existing financial frameworks. Ripple's partnerships with banks, custodians like BNY, and regulators around the world create an environment where XRP can be used without institutions feeling like they are stepping into risky territory. This is also why Ripple's licensing strategy matters so much. Each new license expands the number of corridors where real money can legally flow through Ripple's network. The UK approval adds one of the world's most important financial centers to that map. Combined with licenses in the US, Europe, and Asia, Ripple is building a global regulatory footprint that very few blockchain companies can match. And when Ripple builds these corridors, XRP becomes more useful. Not because people are speculating on it, but because it can actually be used to move value between regulated endpoints. That is the kind of demand that is structural, not emotional. Let's also address the question many people ask. If this is so important, why doesn't the price reflect it yet? The answer is simple. Markets react quickly to hype and slowly to infrastructure. Building rails for the financial system does not produce immediate excitement, but once those rails are in place, they become extremely hard to replace. Think about how long it took for the internet to be built and how invisible the early infrastructure was to most people. The value came later, when everything depended on it. Ripple is doing the same thing for digital finance. They are building the back-end systems that banks, fintechs, and institutions will rely on to move money in a tokenized, programmable world. XRP is not the headline product. It is the engine that helps the system function across boundaries. This is why I say that XRP has a systemic advantage, not because it will always outperform in a bull run, but because it is positioned inside the infrastructure layer of finance. When tokenized deposits, stablecoins, and digital assets become standard, the assets that connect them will become essential, because what we are witnessing is not just progress for Ripple or XRP. It is the early structure of a new financial operating system. Over the past few years, crypto has moved through phases. First came speculation, then came regulation. Now we are entering the phase of real integration with traditional finance. Governments, regulators, and major institutions are no longer asking whether digital assets will be part of the system. They are asking how to implement them safely, legally, and at scale. We are seeing this in the United States with clearer rules, in Europe with MyCA, and the UK with FCA approvals, and across Asia with structured licensing frameworks. The environment that was once hostile to crypto is now being redesigned to support regulated digital finance. This is why developments like BNY's tokenized deposits and Ripple's UK licensing are so important. They show that blockchain is no longer being treated as an experiment. It is being integrated directly into banking, payments, custody, and capital markets. And when that happens, the assets and networks that support this integration become critical infrastructure. BNY is building programmable digital cash for institutions. Ripple is embedding RLUSD into that system as a compliant bank-grade stablecoin. At the same time, Ripple is securing regulatory access across major financial hubs so that real money can legally flow through its network. XRP sits at the center of this design as the asset that connects networks, moves liquidity, and enables interoperability between systems that would otherwise remain isolated. This is not about replacing banks. It is about upgrading how banks move money. Traditional systems are slow, fragmented, and expensive. Tokenization, digital settlement, and programmable money solve real problems for institutions. But they also create a new challenge: how to connect all these systems across borders, platforms, and currencies. XRP exists for that exact purpose. For XRP holders, this changes the narrative. The question is no longer, will XRP pump this cycle? The real question is, will XRP become part of the infrastructure that institutions rely on to move value globally? If the answer is yes, then demand is not driven by speculation. It is driven by utility, liquidity needs, and network usage. This is why price action can feel disconnected from progress. Infrastructure builds slowly. Adoption happens quietly. The internet did not change the world overnight. Neither will blockchain-based finance. But once the systems are in place, they become difficult to replace and extremely valuable. Ripple's approach reflects this reality. They are not chasing trends. They are not prioritizing short-term excitement. They are investing in licenses, partnerships, compliance, and technology. They are choosing to remain private so they can focus on execution rather than market perception. They are putting capital into building the rails that will support the next generation of finance. When you look at their footprint, it becomes clear. They are licensed in multiple major jurisdictions. They are integrated with global banks. They are working with custodians like BNY. They are building stablecoin infrastructure with RLUSD. They are positioning XRP as a bridge asset in a tokenized financial world. Very few companies in this space are operating at that level. This does not mean there are no risks. Regulation can change. Adoption can be slower than expected. Markets can remain volatile. But structurally, Ripple is aligned with the direction of global finance. They are building where money actually moves, not where hype is loudest. For those of you holding XRP, the most important thing is perspective. If you are looking for short-term excitement, this may not always be satisfying. But if you are looking at where the financial system is going over the next decade, the signs are clear. Digital assets are becoming regulated. Banks are tokenizing money. Institutions are moving on-chain. And the need for fast, neutral, cross-network liquidity is only growing. That is the environment XRP was designed for. So when you hear about BNY launching tokenized deposits with Ripple as an early participant, understand what that really means. It means Ripple is not on the outside of finance trying to break in. It is already inside the system, helping design how digital money will move. And when you see Ripple securing top-tier licenses like the FCA approval in the UK, understand that this is not just expansion, it is validation. We are entering a phase where blockchain is no longer about disruption. It is about infrastructure. The winners in this phase will not be the loudest projects. They will be the ones trusted by regulators, adopted by institutions, and embedded into the financial plumbing of the world. Ripple, RLUSD, and XRP are positioned exactly in that layer. If you've stayed with me through this full breakdown, you now understand why this news is not just bullish, but foundational. This is how systems are built, quietly, methodically, with compliance, partnerships, and long-term vision. On BullionIQ, my goal is not to sell you hype. My goal is to help you see where finance is actually going. If you found value in this analysis, support the channel, share it with others who want clarity instead of noise, and stay tuned. Because what is being built right now will define how money moves in the digital age.